So we've got NFP data in about 9 or 10 hours. So I thought we'd take a quick look at the US dollar, longer term stuff, and try and ignore some of the noise that inevitably comes with that volatile number. Now on the daily chart, dollar index, we've got some decent support levels, including the January bullish trend line, 200-day EMA. And I like that we've got this failed spike lower of the 200 EMA and this little bullish engulfing candle heading in. So purely on the charts alone, I just think that we've got a bit of a near-term trough after this sell-off, which was a combination of FOMC meeting and US and Japan colluding with each other to get a stronger yen. Near term, I don't think we're at an imminent risk of another intervention. And if we get even a slightly interesting number or decent-ish or okay number for NFP today, then I think we have a trough here. We could be looking for a retracement as we get into next week. Obvious area of resistance is the 50-day EMA, these swing lows and the monthly pivot point around 100.30. Beyond there, though, I've just still got a feeling that this is a corrective move against a much bigger downtrend. The question being, have we finally seen the end of that correction? Possibly. Got a decent bearish engulfing candle. And again, I've outlined my near-term bullish bias, but ultimately, as time goes on, I'm looking for reversal candles within this bearish weekly candle for anticipated break lower. As regular watchers or readers would know, that I think we've seen a significant top in 2022, lower high in January 2025, and this is simply a retracement against this bearish trend. So I'm looking for movements lower as we get into possibly next year, but near term, looking for a bounce, pretty simple. Looking at the actual numbers, don't worry, we're not going to go too much into this pretty boring spreadsheet. The numbers to look at here is 82%, and that means that healthcare and social assistance accounted for 82% of NFP figures last month. That number fluctuates month to month, but just believe me that when you compare these numbers with the headline, pretty much always the significant chunk of NFP job growth comes from this one here. And that's quite useful to know because there were a few headlines around ISM Employment and ISM Services Employment that contracted. So that doesn't paint a particularly great picture going in because services accounts for 68% of NFP. But when you sort of look back, it's not been a great predictor of the headline NFP numbers. So the green line's ISM Services and the blue ones are, that is your headline NFP. That's services, and that is healthcare, the one with the that has the majority stake in that headline number. So in actual fact, you could say that ISM Services has a better correlation with the healthcare and social assistance one. So it's probably more useful if you're looking at analysing the economy and rotation within the sectors itself. But in terms of the headline stuff, keep an eye on healthcare because that's the real proxy here for if you've got job growth or not, because if you remove that, you don't have any growth. Simple as that. Finish up quickly on a very broad look at FX majors. And, you know, when I look at these, I still get the impression that we're looking for a bout of US dollar strength is coming up. Now, dollar yen, it has been grinding higher, as I suggested at the start of the week, because you've got this significantly big sell-off and support held. You've got a failed movement lower here, effectively a bullish pin bar. These aren't particularly nice conditions to trade, but again, time and time again, when I see these kind of shell-shocked markets, they just roll over. It's so often that when it establishes support, you just get this really horrible retracement against it. I'm not saying it's a nice thing to trade, but it's a pretty obvious observation. When you see that pattern, it always jumps out. So it's a fearful market because traders are concerned that Bank of Japan or Ministry of Finance will step back in, and they're just not. So at the moment, I think it's probably going to be allowed to drift higher, possibly towards 160, 159 at least. Dollar Swiss is probably one of the cleaner ones. If we do get a decent print, Dollar Swiss looks pretty good to me. Uptrend, it's held support around that January high. Bullish engulfing candle above the 10-20-day EMA. To me, that looks like dips within yesterday's range. Looks decent, I think, as we get into next week. Aussie dollar, it's probably not one of the best shorts, but it does look like it's topped out of the near term. I think as we get into next week, maybe we'll be pulling back to 70 cents. Pound dollar is interesting because you've got this really decent movement higher, but it is a lower high relative to this one. Got bearish engulfing candle, kind of a shooting star, not quite, but a lower high, and momentum could potentially retrace. Not a significant move, but maybe back towards the 10 and 20-day EMAs. I like the very nearly bearish outside day on the euro. Again, maybe it's going to trace back. We might not get compelling moves next week, but each chart I look at, I'm just saying that to me, it looks like the dollar wants to bounce. Dollar CAD, nice trend up here, bit of a pullback. I don't know whether this is going to continue low or higher looking at this chart alone, but we do have the March and January highs. We've got an attempt to hold above 140. Keep in mind that we do have Canadian and US employment data out today, so it's probably not the nicest one to be looking at in the next 12 hours, but potentially it could have some sort of decent rebound if we get a divergent mixture of numbers. If Canadian data employment misses and US slightly beats, then we've got support here already established, so maybe got a decent bounce. Need to get NFP numbers out of the way first, of course, but the main point of the video is I think we're probably looking for a dollar bounce as we get into next week. Unless the numbers are completely tragic, then we can forget that. We can then revert back to the more bearish case and from the weekly time frame where we get a break of this trend line and break below 99 and whatever. As always, hope this is useful. Wish you the best of luck with your trading.